Okay, let's talk about some UK stocks in that case. I've been looking at REITs because REITs have been surprising me lately. I thought we were basically in a deflationary period, and the idea being that inflation's coming down, but we're pretty much in a recession. What does well in that kind of thing? Hard assets, effectively, stuff like REITs. But no, REITs have had an absolutely miserable time of things in the UK. So sector losses are around 4.4% in terms of their property values, and this was in the kind of last quarter to the end of 2022. I haven't seen any more recent data than that yet. And some of the worst hits were ones with most exposure to warehouses, so industrial REITs, those kind of things that we're all bullish on because of the rise of e-commerce. And that's effectively where I'm heading with this, and I'm wondering whether there's an opportunity here. So here's some numbers of a sort. Here's roughly how much they were down in net asset value as far as September of last year was going in terms of that first sort of 9 months then. So there's a company called Warehouse REIT, which basically owns what it says it does, which is exclusively warehouses. That was down into 12% in terms of its net asset value, and 35% the stock was down over 12 months. That currently has a dividend yield of around 6.5%. London Metric Properties, another warehouse-heavy but not exclusively warehouse-focused REIT, also down 12% in terms of its net asset value, down 31% over the last 12 months. And a company called UK Commercial Property was down 10% in its warehouses and down 34% as a stock over the last 12 months. London Metric Properties has a dividend yield of around 5 and a bit percent. Not sure about UK Commercial Property. Forgot to look it up because I'm not a dividend investor. Whoops. Couldn't find any portfolio data for Segro, which I know Paul owns. They didn't really say in their report, as far as I could tell, or I had to dig for it, which made life more complicated than I was willing to go to for this. But their stock is down around 40% over the last year. So it's one of the worst performing FTSE 100 stocks of the last 12 months. I think it's I think it might be bottom 3. When I tried to list them, it showed as bottom 4, but that's because it didn't recognise Haleon as being a year old, so it claimed to have done basically gone to 0, and that doesn't count. So there's a couple others. Persimmon's one, and I've forgotten the one, but I think it's Ocado actually that's one below it. That's pretty much rock bottom here. So bad times for UK warehouse REITs, but as I was reading article Investor Chronicle was saying, look, it could be worse. You could be a REIT called British Land. British Land is a retail REIT, but they decided to start piling into warehouses and stuff around April last year, and that got them in late in the cycle, and they took a 4% hit as well. And that's down 10% on a REIT that mostly owns retail parks. So it's one thing, I guess, if you're a warehouse REIT or London Metric Properties or something like that, and you've been effectively riding a pretty good bull market in warehouses, and then you find, well, look, that we've come off the top a little bit here, and down quite significantly from the top, but we were there on the way up as well. Much worse thing if you started jumping in right at the end of a bull market and thought, need warehouses, isn't it? And bought them all at the top and then are sat on some big losses in net asset value here. So REITs are down quite heavily, warehouses are down quite heavily, and I wonder whether this is thinking about this all wrong. I mean, it's not a good thing if the net asset value of these things goes down, but are REIT investors really in it for the net asset value? I don't think they are. I mean, it makes it life hard to grow. Rising interest rates are a problem for REITs. They basically have to grow either by borrowing or by issuing equity, and rising interest rates is good for neither of those. It makes borrowing more expensive, and their share prices generally come down, which makes issuing equity less effective. But I wonder whether this is focusing on all the wrong things. So the trend in terms of leasing space appears to be shaping up pretty well. There's more warehouse space leased in 2022 than there was over any equivalent period in history in the UK, and that leasing seems to be supported by pretty strong online shopping, e-commerce trends. And when I looked at Warehouse REIT in particular, their rental income was up about 2%. 2% is not stellar growth by any means, but it's not bad if your stock is down 35%, right? That's a big swing value-wise over the course of the year. Interest rates are still going up, prices are still coming down. I wonder whether there's scope for optimism and scope to be buying here. A friend of the show, Casper, is a big fan of REITs, and he's a big fan of warehouses. I don't think he owns any of these, but I wonder whether I might be able to convince him to have a look at some at least. Steve, have you got any thoughts on this? You like a warehouse?
I do like a warehouse, and I was just looking at Warehouse REIT now, which is, I think I've never looked at it, and I think I've never looked at it because when somebody says Warehouse REIT, I naturally think of the warehouse REITs.
Yeah, it has a
rather
stupid
than
name,
actually
but
being,
that might not be enough to put you off.
one of the most, exactly, it's one of the stupidest names I've ever come across in my life, because it's the sector, not the name of the company. I think they've tried to kind of like muscle in and steal it, and it failed, and in so doing, I've completely overlooked them. So yeah, that's what I was typing away at while you're doing it. I was also looking at Tritax Big Box, which is another very popular REIT in the UK. That's actually down 40% in the last year as well. So that's not going very well. But it's not to say that these aren't, potentially very, very good opportunities. I just did a comparison with Prologis, which is the one that I own. That has fallen, just in the last 1 year, it's fallen 19.1%, but from its high to today, it's actually nearly 30 as well. So that's another particularly interesting one. But the size difference of Prologis to both of these UK stocks is crazy. Prologis' market cap is currently 112 billion. Warehouse REIT is at 433 million, and Tritax at the moment is at 2.57 billion. So Prologis is a hell of a monster in comparison. I mean, it does a lot. Its metrics are a lot bigger as well, obviously, to match that. But yeah, very interesting, Steve. Not seen either of these. I did see, while we're on REITs, Alexandria Real Estate just pinged off at 140 for me today, which is not far away from my buy price. That's one that I could be potentially interested in. When I have some money. Either of these jumping out at you, Steve? Are either of these a purchase?
Nothing's jumping out at me yet, and here's why. I think clearly part of the worry with this is over-expansion. I mean, there's not kind of Dutch tulip-style stuff, but there was a point where people, as you saw from British Land, felt we need to own warehouses, we need to find some warehouses, and then we need to go and buy them, or we need to go and build them, or we need to do something, basically, but warehouses. And I'm trying to figure out the oversupply issue here, and if I think there is an oversupply issue, I don't think there is yet. But I am worried about a recession pinching in on some of the smaller businesses and maybe just entirely putting them out of operations. So I'm trying to work out what I think the best quality ones of these are. There's lots of them, and lots of them own various distribution centres. Some, like London Metric Properties, are fairly concentrated near the capital. Warehouse REITs is much more distributed all around the country. There's lots to think about here in terms of asset quality and exactly what does well and what doesn't. I know Paul's a fan of Segro, and he's pointed out several times that they have Amazon as a tenant. We've said before on this show, or I think I've said before on this show, in the context of realty income, having a big tenant like Amazon who is unlikely to not pay their rent has its puts and its takes. And I say that about the stock I own as much as the stock that he owns, right? High quality tenants, you are likely to get rental income from them. You are unlikely to be able to negotiate with them very hard when it comes to renewing things. Amazon is, of course, a big owner of warehouses and industrial distribution stuff and so on. So they're unlikely to cut Segro much of a deal when it comes to, or they're unlikely to be the kind of company you can push around into saying, well, it's this or leave. I think they will leave in that sort of situation. So interesting kind of things, and I'm trying to figure out some sense of differentiated offering here of what's well located, what has the best facilities, anything of that sort. That's the big bit I haven't figured out yet. I am convinced there's bargains to be had in this sector. I just haven't yet figured out where, and I imagine Paul will tell me it's Segro, and he may be correct about that, but I haven't yet got myself clear on that idea.
I'm just scouting around the mall now and actually seeing some of the old favourites are down quite a lot. I knew it was a sector that was getting beaten up, and it's been generally as a sector quite a long-term winner. So it is interesting to see some of these stocks. I mean, they're not just coming off the highs, are they? Segro 38%, Prologis 20%. The Warehouse REIT 35, Tritax is 40. Four Corners is the only one I can find that's actually up, Steve, but it's only up 1% over the last year. And to be fair, that's had ups and downs. That's just the luck of the draw that I picked today to look, I think. But But what I know you're not particularly keen on, Steve, is Digital Realty Trust. Is that something you want to add a little bit to?
I haven't given Digital Realty Trust that much thought here. I mean, I was quite taken with the stuff that Jim Chanos had to say about Digital Realty Trust. It struck me as quite an expensive business to run. They own a bunch of data centres. These things take quite a bit of power. And he had a good look at them and was convinced they don't actually make any money as a result of all of their kind of operations, and that they have... I can imagine them being capital intensive. That point makes a lot of sense to me. And I also worry a little bit about what kind of differentiates their offerings here. Digital Realty, I think, is a kind of Briscoe favourite, but when I think about REITs and when I think about the ones that I own, I tend to think of ones that are sort of reasonably simple and uncomplicated things. Landlord, collect, check, on we go for the next thing. So Digital Realty is one that I haven't really got excited by, even if you leave aside thoughts about hyperscalers building their own facilities here, which I don't know what to make of that.
Yeah, I was just trying to navigate to having a look at DLR's cash flow statement, but it's not particularly interesting. In fact, it doesn't make an awful lot of sense at the moment, so I'm not even sure if these figures are quite correct. But yeah, you can see it is one of those stocks that Chanos doesn't like, because he's not a big fan of companies that have really quite hefty capex cycles, and this one probably doesn't really have a heavy capex cycle. It's almost constant, so it would be interesting to see. I mean, Equinix and Digital Realty have both attracted a very premium valuation for a really long time, so it would be interesting for them to fall apart on one man's opinion, I guess, but they're certainly not doing very well. I can see the point where, you can almost see the point on the map where Chanos started to talk about this. I think it was back in, was it November or September? You can see it's not looking too hot.
No.
Any of them on your watch list, Steve? Which are your favourite three?
I'm looking at Warehouse REIT and I'm looking at London Metric Properties at the moment. I maintain a constant interest in realty income going forward. I'll tell you ones that are not on my watch list from the UK, though, but have been doing undeniably well and comfortably outperforming the rest of the REIT sector. There's two. One called Workspace and one called Sirius Real Estate. And if you don't know what these do, they are basically flexible office REITs. So during the COVID stuff, there was a big hit in line for office real estate with the idea that people will never work from an office again. And that turned out to not be quite true, but it did turn out to be the case that people work from home more than they did before the pandemic. And therefore, kind of flexible office stuff is quite attractive for a number of businesses who are unsure about what their office requirements are. So rather than taking out a 5-year lease on a big office block in central London or something, you can have some more flexible take or leave local stuff without committing yourself in that way. And those two have done reasonably well over the last however long it's been, few years, year or so. Last I looked, they were up in terms of their kind of asset value, and they were putting up a strong showing. I'm not sure. I'm not convinced by them as a general kind of offering here. If I were thinking about office real estate, I would be looking to buy the best quality stuff I could and basically back the idea that this sector is down so much that it's priced to be entirely losers, which there was a point where I thought it might be. And I thought, look, stuff like... there's an outfit called Shaftesbury, which owns what to me looks like some very nice real estate in that particular area of London. It's where the theatres are. I'm not convinced that stuff is going to get turned into working from home. But they also own some offices and some residential stuff, and their property portfolio is a little bit kind of complex to figure out. But if I was looking for UK office space, I'd probably look there.
So I get really hung up on the UK office space. I always sort of perpetually think they're almost too small for me. They're sort of, a lot of them are the size of small penny stocks in America. So I always kind of struggle with that, especially when British real estate is quite expensive. It tends to make you think they probably don't have an awful lot of assets in their portfolios. But I perpetually look at the US, and there's three that I own. I own Prologis, Alexandria Real Estate, and Four Corners Property Trust. And there's one that is permanently on my watch list, sometimes goes into the portfolio, then tends to get sold if it ever runs up a little bit. And that's Welltower, which is one that we don't tend to talk about too much. It not to be confused with MPW, I think it is, which is a hospital REIT which has taken some strange stakes in its clients, and one of its big clients may be going bust.
I don't think anyone's confusing it with that, based on the fact that you said it runs up sometimes.
Yes, Welltower is basically more in the care sector, so older people style housing in America, and that is an interesting sector. We're all getting older, we're all living longer. Well, we were before COVID, but that Welltower is a company that's interestingly poised at the moment, and I don't think it's particularly expensive at the moment. I've just had a quick look. It's actually fallen 20% since I last took a look at it. So, and it's on its way down today. So it might be worth another look.